Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 10th day of April, 2015, and this is the daily report for gold and silver, our weekend review, and what a week we've seen in the marketplace. And to close it off, an incredible upside move across the board in the precious metals markets. Actually, across the board, we had oil higher, equities higher, dollar higher. A really unusual occurrence as far as I see it. First to gold. With about an hour left in trading, we've got gold trading up approximately $14 on the day, over a full percent gain. We've seen the market low at 1193.30, the high at 1209.90, closing, or currently trading, I should say, roughly at 1207, 1208, putting it up $13, $14 on the day. Silver also showing a tremendous gain on the day, and only palladium outdoing it in terms of percentage gain. Palladium up 1.97% on the day, silver up 1.92% on the day, up about 31 cents. We're looking at a market right now with a low of 1622, the high 1664. Current print with an hour to go, roughly 1649, 1650. We'll touch on silver in a little bit. Interestingly enough, of all the markets that we watched and that we chart pretty much on a regular basis, there was really only one market that I saw where we actually had a downtick, and that downtick was actually in the volatility index, the VIX. So that's something that I find quite fascinating, and obviously we'll spend the week digesting why we saw all of these markets moving in tandem. It's truly a rare occurrence. Let's take a look at gold and how we're feeling about gold. Interesting action in the market, because as this market came up, we definitely saw some real resistance come in. It found some support in this particular area, 1182. That's our 50% retracement. Realize that this retracement is a retracement of the shorter rally from 1141 up to 1223. From there, it comes down, and as I said, gets this 50% retracement, moves back up, and this is this week's trading activity, of course, and predominantly this week we saw it under pressure. That's these last two candles being Thursday and Wednesday, this being Tuesday, the rather large move up, and that occurred, of course, after being sideways for a little bit. But you can see right here, this is a 38% retracement level of this same move. So there is absolutely a model to be made that as this market comes down, finds this double top, so to speak here, we could see the market take off and move back to the upside. That's within a pretty solid model. However, before I get real bullish on the market, I really have to see how the market reacts if and when it attempts to test 1218, 1219, 1221, this area here, because we've seen that on the last two occasions, it has been unsuccessful at taking out this price point, first of all. Second of all, there's an old saying, third time is the charm. So we'll have to see really how the market reacts next week as it begins to trade, of course, overseas in Australia. When we look at the moving average convergence and divergence, though, and this is both here and on silver, if you look at it, let's go ahead and kind of blow this up just a little bit so we get a better sense for what I'm talking about. But you can see that they are again now starting to move apart. And what we want to look for is whether or not they're moving closer together, and especially what we look for, of course, are the crosses, because the crosses give us the greatest indication. The issue, not so much the issue that you have, but the one thing that you really have to watch out for with the MACD is where they appear to be coming together and about to cross and do not. I give you this particular area in March as an exact example, because as the market's coming down, you can see that it appears, at least on a short-term basis, that it's beginning to move back up here. And so that could possibly signal a real bottom in the market. And when we look at this market, it does come in, and then you can see them really begin to move apart. And so that's where you have to be cautious. But as we look at this right now, we can absolutely see that they're continuing to move apart. Looking at a daily chart of the US dollar, you can see today's trading activity here. We do have the dollar higher. It is still trading below 100, but just a little bit below 100. And of course, real resistance on a technical basis in the dollar comes in just below 101, call it 177. That is the top that it hit on this most recent climb. We certainly saw it move back down, not into the area of this aberration that we saw. And this, as I said, during that day was the craziest move I've ever seen in the dollar. It's the largest move in 9 years. But now appears as though it found some real support at around 96.5 and is moving off. If we get a continuation of dollar strength, we want to see how it reacts at, call it 101 on the dollar index. Which brings us to the equities markets. Equities markets really strong today, moving back up towards that 2100. We can see that tops here, but I think that more than anything else, what stands out to me on this most recent rally that we've seen, or I should say on this extended rally, is the fact that when we consider the highs and lows as kind of a channel line, we can see that although the market has been having these shallow retracements, we haven't gotten anything quite like what we saw back in 2009 or even what we saw, call it mid-2011, where we actually had a sizable retracement. This market has really been defined by this upward movement, really, which is kind of moved in between with what we'll call very shallow retracements. In other words, it continues to stair step all the way up to higher pricing. And we're looking at crude oil, this being our weekly chart, and you can see the couple of bottoms that it hit. Of course, our bench line, that $50 bench line mark. The one thing that stands out is that we've got 1, 2, 3, now 4 weeks of higher pricing in oil coming off of these bottoms here. And just prior to that, the largest extended rally that we've seen since this major decline in oil has been 3 weeks, and then it hit its top roughly at $55 a barrel and moved back down. Now, the market looks like it's closed at about $51, $52 a barrel, and this is the 4th week of higher pricing. And traders, considering the big picture, this is our monthly chart of the dollar index, and we have had month after month of higher pricing. You can now see that we are on the highs of the month, and after reaching these extreme lows here, just at around 96 and change, it has come off with a vengeance and is absolutely moving to higher grounds, especially with the dollar index being weighted against the euro. The euro, of course, under tremendous pressure. Which brings us to silver. Of course, on silver, we've got this tremendous move in the marketplace itself, moving well over 1650 currently. But my sense is right now, if you look at the MACD, especially on silver, and we'll have to see, again, I pointed out the large caveat that you have with the MACD, but it absolutely, even with this upside move, appears as though it is going to cross. And when we consider, if you just look at the way this market has moved up, kind of found this top action right in here, you've got this rounded top and then began to move down. Unless we go back to this rounded top in the same way that we're looking at gold to go over and breach the 1221 area, we need to see both happen before I can get bullish in either of those two markets. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for a fresh week, another daily update and review. Have a great weekend. Bye-bye.